are Seraphim.
Hello and welcome back to the Generation Space podcast. Today's episode is titled Making Space Profitable. Is commercial viability finally here? Has space reached a tipping point where private markets, not just governments, can drive sustained growth? Let's find out. I'm thrilled to be joined today by two experts, Dylan Taylor, Chairman and CEO of Voyager Technologies, and Dr. Maureen Haverty, Principal Investor at Seraphim. Hello both.
Hiya.
Hello.
For those new to Voyager, they're a defense, national security, and space tech company. They create solutions for civil, commercial, and government missions. Voyager is also the majority holder of Starlab, who are developing an AI-enabled commercial space station designed to keep humans in low Earth orbit and accelerate innovation in space. Voyager aims to unlock new frontiers for human progress, fortify national security, and protect critical assets from ground to space. It's super exciting stuff. Enough from me. I'll hand it over to the experts. So Dylan, first of all, I'd like to congratulate you and Voyager on your successful IPO earlier this year. It was inspiring to watch. And to me, and I think to everyone else, it signaled commercial space is truly reaching viability. From your perspective, what do you see the key drivers behind all this?
Yeah, well, thank you for that. Yeah, we did go public on June 11th. We were roughly 6 years old at the time of going public, so that's relatively quick. We resisted the urge along the way to go the SPAC route. I think that was a good decision in retrospect. But underlying your question and to your point, I think the industry has matured to the point where you can build a real business, profitable, high growth. And of course, in the public markets, there's always a dearth of companies that have kind of the rule of 40, if you will, high growth rate, high margins, capital efficient. And one of the key things that Voyager's tried to be since our founding is very capitally efficient and really focusing on things like free cash flow generation, which is a bit differentiated because oftentimes in aerospace and defense, you see very CapEx heavy businesses. So we've really avoided that. But yeah, we set out to build an operating platform that, was high quality and admired like a Danaher or a Heiko, and really solving some of these critical missions that, humanity needs to execute on in order to keep the world safe and free and interesting. And that's what we set out to do. And going public for us was not the end. It was really the beginning. So now we have access to a larger capital structure and can really do some really interesting things. So we're super excited about the future.
Super exciting stuff. And Maureen, from your perspective, from an investor's perspective, what's your opinion on what's going on?
I think we're seeing a pretty interesting dynamic. So the early stage valuations, they're just sky high, particularly if there's a defense or an AI angle. And if you manage to combine the two, you're golden. But what really stands out is the comeback of larger, later stage rounds. So just last quarter, we saw several companies, Impulse Space, Apex, True Nominally, raise over $200 million each. And they're all companies focused on core space infrastructure. To Dylan's point of like high CapEx businesses, these are definitely high CapEx businesses, but they do have clear applications in defense. And then even in Europe, where rounds are usually a lot smaller, Reorbit, which makes satellites, closed a $45 million Series A, and ISAR, a rocket company, raised $150 million. So the appetite is clearly there. Investors are willing to support large rounds as long as there's technical ambition and a clear commercial model behind it.
Yeah, definitely. Thank you, Maureen. Dylan, you've also gained lots of commercial contracts. You've had contracts with NASA. Can you go into a little bit more about that and explain how that's supported your business?
Yeah, obviously NASA is a really important customer of ours, as are other space agencies around the world. So we have a mission management business doing a lot of the commercial activity on the International Space Station today. That's probably one of the key reasons we won, or were one of the winners of phase 1 CLD program to build the replacement to the ISS, because we have that services component. In addition to that, as you alluded to, we have a national security and defense business as well. That also is doing quite a bit of government work on what's referred to as Golden Dome, but within Golden Dome, which hasn't totally been specified yet, there are very specific programs of record that will be parts of Golden Dome. One, for example, is called Next Generation Interceptor. This is to protect the U.S. and its allies against nuclear-tipped hypersonic missiles from adversaries like China and Russia. So this is like the highest standard you can have because these missiles are coming in at, Mach 4 or 5 in some cases. So how do you actually hit something moving that fast? And it's a no-fail mission, right? If you don't hit it, it's going to not end well. So we have key technology that allows that program to operate successfully, specifically some propulsion technology that's very differentiated, and also some optical navigation and control systems. So being on Next Generation Interceptor is a big technical win for us. And there are other smart missile defense programs that really take their technology cues from things like NGI because it's such a high technical standard. So we would expect that other programs will add our technology in the future as well. And we're already in discussions regarding some of that. So government's a really important customer. And it's not only the US government, but the Five Eyes nations and other countries around the world that we're doing business with. And then, of course, we have commercial customers as well. But when you determine who their end user is, oftentimes it's also a government customer. And by the way, I think what we would expect with this increased defense spending in Europe, that Voyager will be one of the beneficiaries of that, because I think we have very good relationships with companies like Airbus and others. And as they're looking for innovation partners, there are innovation partners in Europe, but I think the supply chain is probably less deep than it is in the US. And I think we're well positioned with our technology, certainly the technologies that are exportable, to take advantage of some of the growth in the European defense spending as well.
Dylan, you mentioned a lot of different types of contracts, contract vehicles, different ways of selling to the government. And I think that's something that we as investors and investors who are investing there more in defense and in space have really got to get comfortable with, because venture capital investors really were all about like, oh, it's the data play, it's software as a service. And, that really drove a lot of hesitation about investing into space for a lot of venture capital investors. They didn't see how this matched with the traditional venture model. And I think as investors have become more sophisticated about the types of really secure ongoing revenue that you can derive from the government. And also, how do you win that? The government likes to buy hardware and then is willing to take services with it, or it is ultimately they're buying hardware but on a services contract. Increasing sophistication, I think, has been a main driver of increasing venture capital willingness to invest in this area.
Yeah, no, I would agree with that. And I think, there have been companies like Palantir, for example. I think if you look at Palantir's market cap, I believe if you were to take Northrop, Lockheed, and Boeing and combine them, you're roughly talking about where Palantir's market cap is. So Palantir, by the way, is a large shareholder in Voyager. We're both headquartered in Denver. Our executive teams are very friendly with each other. They're also a shareholder in Starlab. We partner with Palantir, quite well. But I think they're a great example of, disrupting kind of the legacy procurement systems and really getting, at your point, Maureen, opening people's eyes to the fact that, these technology-driven solutions, and Voyager from our very founding has always leaned into what is next in the technology curve, like where is innovation and technology going? And that's served us extremely well, because if you look at what the customer is struggling with, they're struggling with keeping up. Technology is changing rapidly, but how do they actually get it on their programs, right? How do they actually get it in these mission critical systems? And as much as we love the legacy primes, I think even they would admit they have a hard time keeping up with evolving innovation and getting that technology into programs. So I think they'll either see a company like ours as an innovation partner to help them figure that out, or the end customer is going to go directly to a Palantir, or in some cases an Anduril or a Voyager, because we're all, I think, similar in the way we're approaching the market and buy services in a new and unique way. So I think the returns on invested capital are undeniable, especially if you look at some of the public company exits, us being one of them. But, Palantir's by far the most notable one in terms of where it started and where it's currently trading from a market cap standpoint.
This is the disadvantage that Europe and European startups have right now, is that European countries and nations are not as sophisticated in how they deal with startups, in the sense that they just don't have mechanisms to contract with startups exactly where they are in that startup journey. So we've spoken to a number of startups who say, I've got a European country with a huge military budget, one of the largest in the world, but they can support me with grants at the really early stage, or they can support me if I partner with a prime, let's say a Rheinmetall, a BAE, when I'm a mature company, but there is nothing for me between, let's say, a $500,000 equivalent grant and an $80 million contract. And obviously that really, really hampers innovation.
I agree with that. And that's why I think, to me, the right model would be to have the larger players in the market, whether it's a Thales or a Airbus or others, to pick the right innovation partners. Some of those could be from the US, some could be from other Five Eyes parts of the world, and really partner on the innovation piece. And then over time, I think it's really important, and we're committed to this, Voyager is, actually creating jobs in Europe and actually building a supply chain in Europe. Because I think it's really, really, really important, not only to Europe, but to the world, frankly, that we've got a robust global Western world supply chain that's resilient and innovative. I think that serves everyone's interests, not only investors, but think about the world we live in and having the ability to live in free democracies that are safe from adversaries. I think we're only as strong as our weakest link, right? So I think it's really, really important. Supply chain resiliency and innovation is embedded in all the Western democracies. I think it's really important.
Very important point there. And you touched on the Golden Dome earlier. Maureen touched on defense and security. And it seems like strong performance in national security segments has been fueling this growth and supporting a lot of commercial endeavors. Let's carry on a little bit more, discuss that and talk about adoption. Dylan, what can you tell us a little bit more about adoption stories from customers and any demand signals that you've seen?
Yeah, so probably the easiest one to talk about is our propulsion technology, which I alluded to earlier. So this propulsion technology allows you to modulate solid state propulsion. It kind of has been the holy grail for quite some time. Typically in propulsion, you have a choice between liquid and solids. Liquids are easily modulatable because you can turn the nozzle on and off, but it's very difficult to store these. You typically have to fuel them right before launch, right? That's why you see these large liquid rockets being fueled right before launch with the outgassing and all that. So if you have, let's say, a missile defense system, liquid rockets is not very practical. Solid state propulsion is very advantageous because you can actually store it. The solid fuel supply chain is pretty robust. But the main issue there is typically once you light it, it's going to go. It's going to be like a Roman candle. It'll go until it burns out. So the ability to modulate solid state propulsion has been something that the industry has seeked for quite some time. Our technology allows us to do that. That's a critical innovation. And of course, the customer, you would imagine, would want something like that. But the first question is, does it work? Can you actually reproduce it in the lab? Can you reproduce it in the field? And then can you reproduce it at rate? And by rate, they mean, shipping large volumes. We recently passed CDR, which is Critical Design Review. And within the US procurement language, if you will, on programs of record, once you pass CDR, the best way to think about that is technical risk has really been retired. It's been fully validated. And so that's really where that technology is. And, the old adage, no one ever got fired for hiring IBM. It's very similar when you have CDR rated technologies, because if you spec that in on your particular program, no one's going to question why you did that, because you're not taking incremental tech risk. So I think that's a great example of adoption. And just to give you some context, I mentioned earlier, Voyager's 6 years old. That technology was developed over 11 years. So the company we acquired that was developing that technology had been working on it for 8 years. And we put another 3 years of development into it. So it didn't happen overnight. And I think this, by the way, answers the question, why wouldn't one of the large aerospace primes develop this technology? And the answer is it's just classic innovator's dilemma, right? It's like, why would you spend 7, 8, 10, 11 years developing technology that disrupts yourself, especially if you're a P&L leader and you're worried about making budget and your annual bonus and things like that. So I think there are lots of examples of this. You really need someone from outside the industry or the particular supply chain to do the disruption. And so I'm sure we've all read Clayton Christensen's book, Innovator's Dilemma, but to me, that's a prime example of that.
Do you find that they're responsive to it? Do you find that there's still too much red tape around, or how do you find
I think it's improving. I think procurement, is being accelerated in a lot of cases. I think some of the threats on these mission critical systems are very real. I mean, you see that in Europe as well. They're talking about dramatic increases in defense spending. I don't think that's just talk. I think that's actually going to happen. And to do that, procurement's going to have to be reimagined and accelerated. So I do think talk is cheap, as we say here in the US, but I think in this particular instance, I think the people who are allocating the capital at the government level are serious about what they're saying in terms of increases in spending.
Yeah, we're seeing it every day. We saw Germany say it yesterday at a conference. And so hopefully that will be the case. Maureen, obviously dual use technology is on the tip of everyone's tongue. I think we talk about it daily. Can you go into a little bit more about what markets that is unlocking, both commercially and from a government perspective?
I mean, defense is driving massive adoption of space and new technologies in space. So in the US, obviously you've got Golden Dome. And then you've got things like counter threat activity in space. So where, you're worried about enemy activity involving weapons in space. They're just two use cases, but I think overall they're driving more and more demand for more and more satellites, more infrastructure in space. I think the thing that you have in the US is that the US tends to want to own and operate that. So they will buy the satellites, they will buy the technology. I think it's different in Europe, because you've got the situation where NATO allies are trying to replicate or replace quite rapidly some capability that they relied on the US for, or they've decided they want just to have their own independent capability. I think a really obvious example of that is an intelligence satellite, where I think many countries feel that being able to have your own intelligence and correctly interpret that is really important. And something you might not want to rely on even your closest allies for. That's really driving an interest in Earth observation satellites. But the difference with the US, I think, is that for many European countries, they don't have that heritage and sophistication in operating satellites. So where do you start? They need this capability now, but they don't have, 40 to 60 years of heritage in space to draw on. So what we're seeing is that they're not just acquiring the satellite, they also need the ground segment, they also need analysis capability. They also actually might even need some operations support, whether that's educational or actually directly doing operations. One of our portfolio companies, ISI, I think they're doing that very well. They're providing really quite a packaged end-to-end solution for those countries. And, they're rolling that out to Poland, to Portugal, the Netherlands, Finland. But I think that's the thing, is that they can give someone who's never really used space before, they can probably give them immediate access to existing data, and then they can also give them their own independent capability very quickly. I also think, though, that talking about defense is really interesting, but there is another really big driver in the commercial sector at the moment in communications. I think that in direct to device, we're seeing really, really big changes and a lot of competition here. So you have Starlink, they're rolling out coverage and increasing performance of direct-to-device all the time. Globalstar, with Apple's backing, just made an announcement that it's going to bring into use a 3,000 satellite spectrum filing. They just did that 4 days ago. And then our own portfolio companies, AST and Skylo, are taking two different approaches. AST is launching its own constellation for direct-to-device, and then Skylo's leveraging excess capacity on geo satellites, and it's rolled out capability with Google Pixel, Samsung's G25, Garmin. So this is a really, really competitive space, which requires a lot of very sophisticated satellites, a lot of new technology. And I think for the first time, we as investors and actually the market and suppliers can point to a situation where I can tell you where the 100 or 200 satellites are going to come from funded contracts with known buyers, as opposed to I can point to a really great Euroconsult report that says by 2030, we're going to launch 30,000 satellites. Now it's actually like, these are named customers, these are in our pipeline, we're in negotiations with them. I think that's a huge change maybe in the last 3 years.
Yeah, so we're seeing customers' needs evolving because they're realizing that they haven't got this technology. Unfortunately, some things like the war in Ukraine have caused this need to realize sooner than people wanted it to happen. And then companies we're seeing really do well are the companies that are managing to put all this together in one package. So that makes a lot of sense, Maureen. But what do you both see as the number one driver right now, or do you think it's a combination of everything we've discussed?
I think it's probably defense right now. I think it's probably the big theme, but I agree with Maureen. I think comms, and I would define that as any data product, whether it's text to phone or internet service, but even things like computing at the edge and transmitting answers to, again, it could be a defense customer. I think all of those kind of mega trends are the key themes that investors are looking at. So to me, you can think of it in a couple of different ways. One is the customer, right? And we've talked a bit about, civil space versus defense versus commercial space. But then the other is, what are the key technologies? And to me, computing at the edge, I'll call it next generation orbital hardware that's been enabled by SpaceX primarily, but inexpensive and reliable launch to orbit. And what I'll call innovative solutions in the defense area. Those are the key technologies that I think are really driving investor interest. I do think Earth observation is getting a new look in a lot of respects, and Maureen is much more of an expert in this than I am. But I think given some of the software solutions that exist, with the advent of practical AI solutions now, and let's just say enhanced pattern recognition, I think you can do a lot more with the data packages than you've been able to do in the past. And, at the end of the day, the customer is only going to pay you for the answer, right? They're not going to pay you for a data stream necessarily, or if they do, they're not going to give you much value for that. So it's all about getting the answer to the customer and contextualizing it and doing it in real time. And I think once you do that, you can unlock a lot of value. The customer is willing to pay a lot of value for that.
I read, Dylan, in your recent financial website, it was that I think it was 85% of your growth came from the national security segment.
That sounds about right. I think the last quarter, I think, obviously as Starlab hopefully comes online, that'll even out a bit. But I think right now that's true.
So let's talk about how it's evolving today, what we've seen. Dylan, do you have any, lessons from Voyager's IPO? What did you learn from that?
Well, it's my fifth IPO that I've went through in my career. So basically 9 months of your life, 7 days a week. It's a very difficult process to do it well. It's all about, I think, the quality of the team that you assemble. And we had a fantastic banking team, Morgan Stanley, JP Morgan. I think a lot of it has to do with the cap table you go into the IPO with. And we were very deliberate with our cap table, handpicked our investors, Seraphim being one of them. We were very proud to have them on the cap table. But I think we were very strategic with that. The biggest challenge I see with IPOs or getting companies public are broken cap tables and or misalignment of investors, different time horizons, different priorities. So I think it's really important that you have the right cap table, the right banking team. And then I think you have to have a very good narrative about where the company is going, because getting public is the easy part, in quotes. The hard part is being a high quality public company. And to do that, you need to execute quarter after quarter after quarter, but you need to do so towards this grander vision that you've laid out for investors. Because that's ultimately, if you look at all the successful long-term public company value creators, they have this long-term vision and they have these short-term milestones that they're executing that tie into this longer-term vision. So to me, that's kind of how you get it right. And then following the daily stock price or the daily market gyrations is a fool's errand. It never makes sense. I tell people stock price on a daily basis never makes sense, but on a yearly basis, it always makes sense. And it just means, things smooth out over time and the people who create value over time are rewarded. The people who don't obviously will be found out, whether it's in the first quarter or the second quarter or down the road. So that would be some of my commentary. That's why I don't think the SPACs generally, there are some success stories from the SPAC craze. Rocket Lab's probably the most prominent, although of course they had a tough time before they found footing. But I think that the reason you want to do a high quality traditional public offering is because you can't skip any steps. If you can't skip any steps, that typically means you have to be thoughtful with the way you're building the company. I think that's an important lesson learned for a lot of the companies that went public via SPAC.
Yeah, I think the performance from your IPO definitely gave, investors confidence. And uniquely positions you to, hopefully continue to drive value. And yeah, and as you say, like steady growth, which is super important.
So I actually have loads of questions for Dylan, because I think this is, to Dylan's point, he's done this 5 times, so he can directly compare space to something else. But I think obviously you're an unusually experienced public company CEO in the space sector. Let's say for CEOs who are thinking about going public, why is the cap table so important? What are some of the gotchas with the cap table? And let's say your cap table is not great. Can you fix it before you IPO?
Yeah, I think everything is potentially fixable. It's just a matter of, how much drag there'll be on the process or the valuation. I think cap table is important for a couple of reasons. One is you want alignment, especially at the board level. So we raised, prior to the IPO, I think the total amount of capital we raised, debt and equity, was around $550 million, something like that. We didn't give up a single board seat during that process, which people are shocked when they say that. They're like, how is that even possible? And it wasn't that we were anti-governance. I mean, Maureen knows this well. What it was is we had assembled a public company board from day one. And by the way, I think this also answers the question, why weren't investors demanding a board seat? A few did, by the way. We just said, that's fine. Not only can you not have a board seat, you can't invest. Your invitation has been denied. So I think it's important because you want alignment at the board level. You don't want competing interests. And if you have the right independent board members, and we had 5 independent board members from the day we were founding, all public company level directors, that's the quality of governance that you want in place. As opposed to, let's say, a particular VC that might have a particular fund that has a particular time horizon and a particular interest to get the company public or not public, or a private equity firm, or, and it's nothing against particular investors. It's just you want alignment, I think, at the governance level and the management team. So I think that's one thing. Second thing is, what I see with a lot of broken cap tables is a lot of overhang in the capital structure, a lot of warrants, a lot of convertible debt, a lot of things that create a lot of dilution on public offering. And typically, when you have overhang like that, it's harder to get the company public, because you're not going to go public typically with a round that's at a lower valuation than the last round you raised at, right? But if you have to suffer all this dilution, it sometimes is very hard to get the necessary markup to actually not be upside down between the last private round and the first public round. That's another reason why cap table dynamics are really important. And I'm not saying we got it done perfectly on our side. We had a little bit of overhang on ours because we did have our Series A security that was doing PIK interest that converted to stock. So we had some minor challenges ourselves, but by and large, I think we got it right. And we did it because from day one, we were really thinking, how do we want to capitalize the company? What kind of investors do we want to have involved? How do we want to govern the company? We were purpose-built from the beginning to be public because I had that, scar tissue, if you will, from all the other times that I went through the process.
I think that could be challenging for a lot of space companies who either because they just didn't realize that they were eventually going to go public, or I guess for many of them, who want to go public now, maybe they were founded 10 years ago and they had fewer options on who was going to invest in them and fewer options for financing. And, they did some things to get the company going that maybe is not the best solution right now.
Yeah, I see it all the time. One option for those kinds of companies is to recapitalize with a capital partner who is going to not only provide the capital to recapitalize, but then you have alignment with that investor on getting public during a certain time frame. But that's where large tranches of capital have to come in, right? So that's where you would have a KKR or a Silver Lake or somebody like that. And it's a double-edged sword because if they come in, they're going to want a lot of the economics in an IPO. And by the way, they're typically only interested in larger deals anyway. So I do think there is a void in the capital markets for what I would call a capital partner who can do some of these smaller deals and recapitalize these companies. Maybe Maureen, maybe this could be a spinoff of Seraphim.
Maybe it'll catch up after it's done.
I do think there's a gap there because there are a lot of excellent companies with challenged cap tables that will never get public because of it and can stay private, of course. But, a lot of people invest. I had a mentor of mine when I was doing a lot of angel investing who said, Dylan, I'm not an investor. I'm not in the investment business. I'm in the exit business. And all he meant by that is you're not an investor until you have an exit, because until the capital's been returned to you, it's meaningless. And of course, he's right. So I'm 100% right. So I think a lot of people who invest want to know what is the exit strategy. And it could, of course, be a strategic sale as well. But I think in our industry, it's unlikely you're going to have like a dividend, income generating scenario. So it typically is going to be a sale or a public company exit.
Okay, so cap table and sorting out your cap table, very important and potentially more of an issue for space companies. But what other things do you think that space companies can learn from Voyager's experience? Is your success replicable?
I think it is. I think governance, which I touched on, just a relentless pursuit on talent. I mean, at the end of the day, Maureen, you know this because you're a smart investor. You can have the best idea in the world and the best tech. It's totally irrelevant if you don't have the right team, completely irrelevant. And I tell people, ideas are a dime a dozen. It's, the execution that matters. So I think here's one truism that I've found is they typically see a lot of these founders are very stingy with their equity internally and very generous with their equity externally, right? They're like, oh, we're raising capital and it's free capital because it's equity. And I'm thinking, okay, well, equity is the most expensive form of capital that exists. And once you give it away, you can never get it back, ever. But yet they want to be really stingy with equity internally. And to me, it's the exact opposite. You should be hyper stingy with equity externally. You should guard it. You should interview your investors, literally, and be very picky. Internally, I think you should be extremely generous because those are the people who are going to help build the business and walk through brick walls for you. Of course, I'm being extreme to make the point, but to me, that would be one bit of advice I would give people.
I think we see, if you're like thinking about founding a business and something that you can learn from this is you need to have a decent size employee stock option pool, and you need to use that as a tool to bring in the best talent. You are not going to be able to compete on salary. Even if you do compete on salary, it doesn't incentivize people to work, the same hours with the same passion as your equity. And you also can't fix it later because there's implications of dilution for investors and blah, blah, blah. Just implement a decent sized employee stock option pool when you found the company.
Maureen, just quickly on this topic, what are you looking for, for later stage financing when you're looking at companies at the minute?
It has to be revenue. It's just so simple. I think even 2 or 3 years ago, space companies were still kidding themselves like, oh, it's fine to be Series C. We don't have any revenues and we're still building our product. And that is just, your competitors for investment, they're not telling us that story anymore. They have not been for some time. So I would say that most space companies right now are launching a space mission or the equivalent with their seed round, or maybe, early on in their Series A. And that is with revenue generating customers. They almost certainly will have a discount because, there's higher risk launching on someone's first mission, but they are generating revenue. And if you look at the companies that I spoke about that have raised really large late stage rounds, they were revenue generating from their very first mission. And their very first mission was really with their seed round. And there's 2 reasons for that. Investors have been burned in the past. People have gone through SPACs, they've gone public and they have no revenues, and the revenues have just failed to materialize. And yeah, I think I already covered that because space is easier and cheaper now. People are launching earlier and they're revenue generating. So I think that's essential.
And how often are you seeing that though?
Oh, that they're revenue generating? Oh, I would say all growth stage companies at this point that are going to successfully raise a round, I think, are revenue generating. I suppose the one exception might be a rocket launch company, but nearly always at this point, they've diversified and they're selling some part of their technology or they're selling something just to demonstrate that they can generate revenue.
Let's think about looking ahead into the future, like what will separate the winners from the rest in space.
I think it's the demonstrated ability to build products and launch missions, demonstrated ability to commercialize the products you've developed, not just constantly leaping onto the next product. Space founders often tend to be very technical, very innovative, but can be to a fault. And they don't get a product over the line before moving on to the next one. And then the absolute best winners take one product, one lesson learned, and use that to move on to another product, another market. And then they can look back on a heritage of execution that they can point to enter new markets. So when they're talking to new customers, they can say, okay, we have not done this yet, but you can see we have 6 years of successful delivery on another similar product, and we've learned from that. Obviously, a company like Voyager can point across its suite of products and say, we've done hard things and we've executed across a range of different products. I think a lot of our very successful portfolio companies have taken the same approach. So ultimately, I think it all comes down to execution. Dylan said that earlier, that it's about the strength of the team, and anyone can have an idea, but not many people can execute it. And that's what we're looking for. We see thousands of interesting ideas, but only a handful, as it should be, of teams that can execute on those fantastic ideas.
And Dylan, from your perspective as an operator, similar?
Yeah, no, I think Maureen nailed it. I really like the way she explained the ability to develop technology, to a roadmap and, show traction there, and then use that as an analogy to other products and services you might develop. The only other thing I would add or emphasize embedded in what Maureen said is I think you can create multiples of value if you also are building to a larger capability map, because the way I think the best companies approach the market is value capture. I think SpaceX is legendary at this, but I like to think we're pretty good at it too. I think Rocket Lab has done a very good job of this as well. Looking at the market and say, okay, where are the pockets of value? What are the capabilities you need to have in order to capture that value? What technologies enable you to have those capabilities? So that as you're doing the development that Maureen articulated very well, you're building towards this larger capability assemblage, because I think that's really where you're going to get 10x, 20x, 50x, 100x returns on invested capital. The other thing I like about that approach is, by definition, you're not focusing on parts of the market that are low value, because the worst thing to do is build something that is high EBITDA, but so much CapEx that you basically have no free cash flow generation at all. Because if you don't have free cash flow generation, you're not creating value, right? That's just the math of finance. So everything Maureen said, and then this larger kind of capability roadmap, I think is really important. I think the best companies approach the market that way.
And finally, is commercial viability finally here, Dylan? Is there anything you're allowed to tell us, anything exciting about Starlab, about Voyager?
I should probably not be too specific about Voyager, but let me just talk generally. First of all, commercial viability is here. There's no doubt about it. There have been several IPOs this year, all very large, successful IPOs that traded well above their offering price. They've all settled back down a bit, and they'll bounce around like all IPOs do. But I'm very confident that commercial viability is here. I do think, though, we're still an industry that has some cyclicality to it. We're approaching a U.S. government shutdown potentially here over the weekend. I think the markets are vulnerable to those kinds of disruptions. I don't think it's going to be all up and to the right for all companies. Happy days are here again. I think there's still going to be some cyclicality to it. But what I would say is, if you're an investor and you're looking at frontier tech, I think you would be crazy to not have national security, space, and defense exposure in your portfolio. Because not only is it such a significant part of the global economy, but I think it's likely to outgrow other parts of the economy. And if you look at the technical disruption that the industry is experiencing, I think it bodes very well for the kinds of companies Maureen and I have been talking about. I'm super bullish on where the industry is going. And every day I meet new founders, new technologies, new people coming into the industry, new investors. And I think that's a sign of an industry really getting traction. we've never been healthier, never been better as an industry. I'm super bullish on where we're headed. And I think that only gets further accelerated as some of these other technologies come online, like Starship. I mean, Starship's a game changer in terms of getting hardware to orbit, right? That's going to change the game yet again, just like the Falcon program changed things previously. So super bullish about where the industry is headed.
Dylan touched on so many of the great ones, but I guess I was speaking to a colleague a few weeks ago about how valuations are sky high now in defense, and valuations are actually pretty reasonable in climate. And that conversation was exactly flipped 2 years ago, where climate valuations were sky high and no one wanted to touch defense. But we were in the thick of it both times because space is integral to climate and it's integral to defense. And we were just musing about, okay, in 2 years' time, hopefully the security situation has improved and maybe we've been able to move on a little bit from defense. I don't think that's going to be the case, but if it has, what are you going to be in the thick of in 2 years' time? And I think the really amazing thing for us is that space is a core enabling technology for the world as it is today and the world as it's going to be tomorrow. And therefore, we're always going to be in the thick of it. That's what I'm excited about.
That's fascinating. Thank you so much to both of you. Big thank you, Dylan. Big thank you, Maureen, for joining me today. If you enjoy the conversation, be sure to subscribe to our podcast and follow Seraphim and Voyager for more insights for the future of space. Thanks to everyone for listening.
3, 2, 1. We are Seraphim.